All right, everyone. Welcome back to our Money con Ganas podcast. Again, myself, Francisco. We have Josim and Martin. Ruben was able to join us for this recording, but he will be in future ones. But again, we started this podcast really to be able to talk everything money. A lot of these conversations that we're having, we felt that other people would also want to have and were important. So we'll be talking about crypto investing, how we grew up and how we were raised with money, issues with money, wins, challenges, etc. Again, this is the second episode to our cryptocurrency series. And we had the first one a week ago or so, and it was just a very brief introduction to Bitcoin. Again, not financial advice by any means, but it's just mainly to educate as much as possible, to bring information to as many people as possible, especially in this new emerging space. What we want to do in this second episode is we want to go more into just a very quick episode on how to attain Bitcoin, how to store it, what does hot, cold wallets mean, what does Coinbase, Binance, etc. do. And going off of that, we're going to start off with just how do you get Bitcoin, right? And let's start off with any exchanges. And for anyone there listening, an exchange is just a place where you could find all magnitudes of coins, including Bitcoin, Litecoin, Ethereum, etc., all the way to meme coins such as Dogecoin. And you could purchase them, you could trade for them. Some exchanges allow you to obtain these coins with US dollars, and other exchanges do not allow for a bank transfer or like for you to deposit money. So you'll have to get a coin and then trade for a different token or coin, whatever it may be. We'll get more into details, but I don't know if Jocelyn and Martin, you want to maybe start off with maybe the easiest one, right? Coinbase, right? I think that's an exchange that's the most easily accessible to everyone because it is linked to your bank account. It is an app that you can have on your phone. It is a web browser, as Jocelyn has put up on the screen, that you can easily sign up for, create an account. So I don't know if you would just want to give a little bit of details on that one, and then maybe just roll on into Binance I see up there.
Yeah, so for Coinbase, it's like you said, one of the easiest ones, or I personally I find it to be one of the most user friendly. It's also probably, if you're a beginner, you would feel probably more comfortable going through Coinbase at this point. Personally, that's what I did. It also Coinbase, at least from what I've used it also allows you and informs you in some of the tokens or coins that they have available. So it's also in a way for you to also earn a couple of the coins, if anything, or rewards by signing up and learning, watching some videos, things like that. Um, so that's my experience so far with Coinbase. Um, for the second one that we have, it's Binance, and if anything, actually, I heard about Binance through Francisco. So, Francisco, do you have any additional insights that you would like to share?
Yeah, so actually, as you can see at the top of the screen, Binance.us, that was started maybe in terms of regulations pushing anyone in the US market to use this version of Binance. There's a Binance worldwide, and they have a lot more options and tokens available. Binance US is a little bit more restricted in that regards, but Binance is the biggest exchange that we can use. And this exchange has the majority of coins and tokens that people are aware of, that are emerging. If it's on Binance, it's a very good likelihood that the projects or the tokens are on the bigger scale in terms of what they represent, but that's not always the case. So you always do have to do your research. The way I see Coinbase is more of like I don't know, Robinhood or Acorn, right? It's a newer player in the space, but it's meant to be very easy to use, right? Like you could go on there, it's very intuitive. Binance allows you to have a lot more flexibility and a lot more trade options that might not be available on Coinbase. And so for this, you might want to do a little bit more research in terms of like what it is, what it entails. You do have to do like know your user, which means that you'll have to submit like documentation so that they could verify who you are. I believe Coinbase does this too. I feel like all the exchanges in the US do this. So just be aware that when you are signing up for this, they might ask you for like your license or like your passport, etc., to like verify that you are who you say you are, and you can't just like buy these coins anonymously, which a lot of people have that misconception. So a lot of these exchanges do verify who you are, and that takes the anonymity away. So Binance, the bigger exchange, right? A lot more coins, that has a lot more features. Coinbase is just a lot easier to use in terms of like beginners. You could just buy Bitcoin. You could put in $100 and trade it for Bitcoin instantly. So I think a lot of those features are getting people to sign up and then be able to utilize this space. So we have these exchanges. I think the next thing I just want to quickly or briefly mention is that this is not the only way to like get Bitcoin or Ethereum, etc. There's also ATMs. It's not the most cost-friendly option, right? They have a little bit higher fees, but in this case, if you go on Google Maps, you could quickly search like Bitcoin ATM. You could find one. I mean, I found like 10, 15 within like 10, 15 minutes away from me, which is a good amount. And for those, yeah, you could just take cash. You'll put in your cash like an ATM, and then it'll transfer whatever amount you bought into a wallet, right? And this wallet is what's actually going to hold you your cryptocurrency. The other one, so we have the exchanges, then we have ATMs, and what Bitcoin essentially started, what the white paper mentions, is this peer-to-peer, right? So I could send Martin $20 for something that I owe him for. Or I could send Joasim another $50 for something he bought, or like we split dinner, etc. So peer-to-peer, right? So that means I could send you cryptocurrency, just like Zelle, just like Venmo. It's just a different kind of avenue, right? You could do Lightning Wallet on Bitcoin, which is almost instantly. You could do Ethereum. I know Martin paid for like a haircut a couple of weeks ago in Ethereum. I paid for a haircut maybe a month ago in Bitcoin. The fee for like sending Bitcoin was like a fraction of a penny. So there's that. Like you could utilize this from peer to peer, and that's another way to be able to acquire or trade off or sell off some cryptocurrency.
And just real quick.
Go ahead. Go ahead, Martin.
The important thing to know is that you might think, why the fuck would I want to send, like, pay for something in Bitcoin or send, like, what the fuck is the point of that? Well, the key thing to note is that it's all decentralized and, like Francisco said, peer to peer. So there's no one central entity that is in control or monitoring your shit. So if you're like super, like, you're one of those people that cares about that, that's perfect for you, you know? And it's like, it's you're basically kind of outside the traditional finance system, but it's still like a way to transact with each other. That's all I wanted to point out.
No, yeah, that's good. It's almost like the digital way for people that love paying in cash to not have to pay with a credit card or with their bank. You just pay with crypto. It's very easy to do. It's almost instantly, but you don't have that risk of carrying a few $100s in your pocket that you can lose, that you can drop, etc. You could have it on your phone, on apps. You could have physical keys, which is just an encryption coded wallet that holds crypto. You could have it on your laptop, etc. So it does facilitate that. And I feel a lot of people that do have that, I need to pay in cash, I need to pay with cash, that's the closest thing I could sense it. It's just digital cash. You don't have to have a credit card, a Venmo account or anything, and it's pretty seamless. The other thing is, going back to what Martin said, a lot of people do mention this. Why would you pay with Bitcoin when you don't know if the price might go up or down? And a lot of the times is because you might already are gonna spend this money, right? If I'm gonna spend $50, like it doesn't matter if I'm gonna spend it in Bitcoin or if I'm gonna spend it in dollars. Like I'm not gonna think of like, oh, I spent $50 now and then now it's worth $100. Like for me, it's like I was gonna spend the $50 regardless, but it's just a easy, convenient way for me to use that money and for me to send that money. And yeah, you do take that risk of like there might be volatility and it might go down or it might not be as high as what you initially thought it was. But that's also a risk in terms of like if you're a holder of like, oh, if I take this money, I know that either I cash out at the same price or I'll wait it out. It's not something that I need immediately. So for me, if someone is sending me crypto, I'll hold on to it and I'll make sure that it has increased in value before I like go out and like spend it. So there are like different arguments and we'll get into those in future episodes, but that is one of the things of like that does come up when people are thinking about their Bitcoin or like why they would pay with crypto, etc. So Martin or Joasim, I don't know if one of you wants to just kind of briefly explain what like how do you store your cryptocurrency? Like, you know, what's a hot wallet versus a cold wallet? Some people may have not even heard of this, so it's just like, what does that mean? What is a cold or hot wallet in crypto?
Yeah, I don't mind taking the lead on that. So basically, a hot wallet is just, we say hot because it's connected to the internet. So if you want somewhat of a safer way to store your crypto and not just have it on an exchange, because in the past we have had exchange hacks, but that's happened like years ago. Like the most famous one was in 2014, the Mt. Gox hack, which was like Mt. Gox was the biggest exchange of that time, and it was hacked for a certain amount of Bitcoin, a lot actually. But since then, the security and technology has improved so much that honestly, if you're just getting into it, that doesn't really fucking matter, to be honest. You could just have it on Coinbase or Binance.us, whatever. Like those are very reputable exchanges with huge volumes. Like they're institutional grade, like institutions use them as well. So honestly, and studies show most retail traders have their Bitcoin and all their altcoins on exchanges anyway. But if you really are paranoid about security, like I am, and probably others here, then you want to have like a safer way to store your shit. So basically a hot wallet is like, you can doubt the most famous one is like MetaMask. I don't know if you want to pull that up, Josim, real quick. There's also Coinbase wallet. These are just like just ways of technically storing your crypto there. But you might ask, what's the difference between an exchange and that kind of wallet? Really, there isn't much of a difference other than exchanges are a little bit riskier, so it is a little safer to have it in a hot wallet. But even then, hot wallets, they're still hot, right? They're still connected to the internet. So as long as they're connected to the network somehow, then they're always vulnerable to be hacked. But again, this is very unlikely to happen now. Regardless, real quick, I will also mention, as it relates to exchanges, I do all of my trading on decentralized exchanges, or what we call DEXs for short. Right? We talked about Coinbase, Binance earlier. Those are CEXs, centralized exchanges. I do all of my trading on DEXs. And basically for those, you have to import them into a hot wallet. So I use like MetaMask as well as Coinbase wallet. I don't know if you want to pull up like Uniswap. That's pretty much like the decentralized exchange I use. And you might say, why do you use like a decentralized exchange? So there's not that I really care about this, but there's no like central entity that owns this exchange. It was created by developers, Uniswap Labs. Uniswap is basically an exchange where any new and upcoming project, they list on there. So you can literally, like any project that ever starts off and isn't as big yet, doesn't have a lot of funding to begin with, starts off here. And that's where I make the majority of my gains, because in order for something to hit the major exchanges like Coinbase and Binance, they usually start off small, right? So by the time they list there, you've already missed out on the majority of gains. So it's called Uniswap because you can swap literally any coin for any coin. Like it's not just paying with cash. You can swap your Ethereum for this. You can swap a random coin for another random coin. But you have to note that Uniswap, for example, runs on the Ethereum ecosystem. So you have to have some spare ETH to pay gas fees. So I don't know if you want to, so that's, yeah.
Hey, Martin, I think this is really cool and insightful. and we'll probably, just for people who think like, oh, this is too quick, or we might not go into enough detail, like we'll do another episode on more of like the decentralized exchanges and altcoins and what all that means. But yeah, like this is cool for folks to see that there's like so many options out there, for like these hot wallets and Uniswap, Sushi Swap, etc., so that people could kind of start understanding. And yeah, we'll make those episodes and we'll go more into details. Martin uses them a lot, so it'll be good to get his insight on that.
I don't know if Josim, you or somebody else wanted to touch on cold wallets.
So cold wallets are essentially, at least that I know of, are physical wallets, right? So they don't look like physical wallets, but it could be if you remind me, Francisco, it's the Nano, right? Nano Ledger.
Yeah. So there's a multitude of them. There's Ledger, there's Trezor, there's places where you can go and create a wallet itself, and usually you want to have this offline, and this is basically what's going to hold your crypto off the internet. Like Martin was mentioning, hot wallets are online and they're on the internet. These are offline. You do have like a seed phrase that you can use, because if you do lose this little device that Martin was holding up, your crypto isn't just like gone or disappearing. As long as you have that recovery phrase, then you'll still be able to get all of your crypto. So it's not living inside of this device. This device just gives you access to the actual coins or tokens that you may have. So you may have this to easily connect to like your computer or to send crypto back and forth, but it's not living inside of this. This just records it on the blockchain. So the blockchain could acknowledge that you do have this, that you own a certain amount of Bitcoin or Litecoin, whatever it may be. But if this device gets destroyed, it's not like your cryptocurrency is gone. So that's just something for people to understand, that you do have a way to recover your cryptocurrency. And that's happened where there are cases of like people who've lost their hard drives or like their wallets, etc., and they haven't been able to recover them. So that is one of the trade-offs, right? So you have more security, but it might be way too secure to the point where you can't access it either. So you have to understand how they work, go into their websites, start understanding how these wallets function, like what you can do, how you can recover, so that you're covering all your bases so that you don't lose your cryptocurrency that you are holding on. Which is why, like Martin says, sometimes keeping your crypto in like Coinbase wallet or MetaMask might be easier to recover, or like you might have ways to get on there in case you forget your password. So that just comes at a little bit higher risk. That risk has been minimized in the last couple of years as the whole sector grows, security grows on all of these exchanges and hot wallets. But a lot of people who may have a bigger quantity may want to keep them separately. So just understand that you want to do your research, you want to understand how your wallet works, you want to have backups for these, and follow the instructions. A lot of times is you write them down on physical paper, and then you might put them in a safe, you might put them somewhere where you have access to them. And that way you'll be able to recover your crypto. And for beginners or people who are just starting off, this may not be easy to do or start with, but you don't have to, because you could keep it on Coinbase wallet. You could keep it on Coinbase. It's fairly safe in terms of like what Coinbase offers. And that's what I feel like majority of people are going to start in terms of their crypto buying. And the reason we've pointed these out, and there are other places where you can buy crypto, such as Robinhood, PayPal. And for me, I don't personally like those exchanges because you don't physically own the coin. So if you buy on Robinhood, you can't take it out of Robinhood and like trade it or put it into MetaMask like Martin was talking about. I don't know if they changed that. I know that was the case, and and they would only let you keep it on Robinhood.
Yeah.
And there's a saying in the crypto world, and I forgot who kind of made this famous, but is not your keys, not your cheese, which means if you don't own the private keys to your crypto, it's not really yours. And Robinhood has had issues with like the way they run their business. So I would stay away from those places of like buying crypto. But if you do have any, then just be aware that you may not be able to physically remove your Bitcoin from Robinhood into like Coinbase. Well, if you buy on like Coinbase or any other exchange, you're able to transfer it over. You could send it to people peer to peer. And because that's limited, it kind of defeats the purpose of what crypto is. So I would just make sure that you're able to access your crypto and not allow a company to kind of hold on to these things for you.
Yeah. Then the other thing too that we wanted to talk about, right, is the different places where they could probably find, information about, these different coins, the different tokens. And two of the websites that actually Martin and also Francisco have shared with me in the past is CoinGecko, and then crypto coin market cap. So these are the two places. And so what they allow you, right, is they'll give you the list of all the different coins out there, or projects out there, and they just allow you to go and click on them and give you information, right, as to what's been happening throughout the day, for example. Also like historical information. It also gives you links to the white papers, information about where they're listed, the different exchanges available. um so yeah, so these are like places where you can actually go ahead and inform yourself about what is going on with that specific project at the time. um so as you can see, this is also coin market cap. It's the same thing in a way, right? So both of them are really helpful. I'm not sure if there's specific features that you like about either of them, Martin or Francisco.
I use these mainly just to see like how everything's going on, like overview. And like you can see, crypto's not doing that great right now. So this is some of that volatility that we spoke about in the first episode, right? So I think in that first episode, Bitcoin was like at 68,000 and it's now hovering at 56,000. I don't believe any of us are worried of like how crypto is currently sitting, um, just because of the cycle in terms of like the bull market itself. But this is something to keep in mind, that you may have bought that week at like 60 plus, and then now it's at like 56. So this is a good way to see like how the market is doing, new coins, also news, or where to find these coins. Like it'll tell you on like what exchanges. And that's mainly my primary use for those two websites, is just to see the state of like the market at that current moment. I don't know, Martin or Joasim, if you have any closing statements. I know this is just a brief episode on like where to find exchanges, where to buy Bitcoin, how to store and take care of your cryptocurrency once you do obtain it. But if there's anything else that you may want to add, just let us know.
The last thing I'll say real quick is just that the entire purpose of like using like these sites like CoinGecko, CoinMarketCap is to scan the coins that you're thinking about investing in. Look at their actual technical aspects, like the market cap, which just means the valuation, the value of a certain project relative to others. Is it kind of overvalued, undervalued, mispriced? Is there an investment opportunity there? You have to look at the circulating supply of tokens. So like how many coins are circulating now, and what's the total supply that there ever will be? And is that a huge discrepancy? Meaning if there's a tiny circulating supply relative to the entire supply, then you'll have to look at the token vesting, meaning like the coins that are put out in circulation. How often does that happen? Because when that usually happens, that puts a lot of sell pressure, because usually those are like different funding partners that receive those tokens every few months, every few weeks, whatever, depending on that token vesting schedule. They dump on the market, and so you got wrecked, you know? So it's important to use this as a tool to make sound investment decisions, right? Market cap, circulating supply, and total circulating supply, I would say, are the three most important metrics when looking at websites like this, when you're trying to make an investment. And just really quickly to break it down, market cap is just basically the valuation of something, like I said, right? So, and you arrive at that by multiplying the number of coins in circulation, so the circulating supply, by the price. So the reason why these are like the top 10 coins right here that you're seeing on this website by market cap. The reason why something like Bitcoin can be valued so at like a high price of 56K, but it's worth really 1 trillion by market cap, that's its valuation. And you can have a coin like XRP that's valued at $1, but it's worth 50 billion in by market cap. Is the reason that is that there's way more coins, XRP tokens in circulation than there are Bitcoin. There's only 18 million Bitcoin in circulation, whereas XRP has 47 billion. And that's a lot of normies make the mistake of thinking, oh, XRP is $1. Wow, look at the discrepancy between that and Bitcoin. That's gonna go like 50K, right? It's really never gonna do that unless like 30 years happen, right? Because of the market.
That would be incredible if XRP goes to 30K. I could just imagine the rest of the market.
So look at the market cap. That's the most important thing, not the price, not necessarily the price. Yeah, no, it's thank you, Martin. That totally makes sense to me. I think that there's a lot of and we'll go into this in future episodes where, you know, the misconception, right, at times, just because the price might be a little bit low at the time or seem low, right, that people might think about it as, oh, this is an opportunity to buy because it's going to go to the moon. So it's just, how do you inform yourself, right, so that you know what really to expect, you know, where do you go from there. So it's just information that we need to make sure that, you know, people are aware of at the same time, right, as they're making their investments and buying some of these coins or tokens. So
awesome. Well, thanks everyone for getting this far into the video. Again, we want to thank everyone who's shared or commented on any of the posts that we've made. We do appreciate it. So if you could go ahead and share this video as well. I know all of us will appreciate it, and we'll continue to provide more videos and hopefully more insight for all of you. Awesome. Bye, everyone.